Happy holiday, guys. Welcome back to Roxham TV. Today, we're going to start with some macro news because China just came out and managed to keep their interest rate unchanged. Well, this is actually, it could be quite concerning in terms of the macro scheme of things because China, as we know, it has been suffering from deflation for quite a while, not to mention other parts of the world, including US. We have seen a rising and uptick in the unemployment rate. The current figure is sitting at 4.6%. And Japan, on the other side of the planet, is also doing rather suffering, especially when it comes to the inflation rate, is ticking up. And that's why Japan took the action of raising interest rates. So the question we are asking here is the world economy on the brink of collapse. So, is there anything we should be concerned here? If so, if there are any position we can pull to de-risk a little bit. Second of all, we're also going to look into the Epstein file because it got released a few days ago, but only a backlash in the community was not happy about it. The reason why is because a lot of those pictures it has been redacted. So not showing any faces, and the DOJ is right now being accused of trying to protect the US president being Donald Trump because Donald Trump was in a lot of those pictures in the Epstein file. Third, we also have the UAE trying to dive deeper into AI and especially what Elon Musk is doing. Well, is the US, there's many stuff when it comes to AI to catch up compared to UAE. Not only AI, but digital assets. Of course, we're going to dive into that in a bit. Well, last but not least, we also have Michael Saylor hinting at buying more BTC. So is that enough to justify and push Bitcoin to a higher prices? Well, we're going to dive into all of that. So first of all, let's dive into the Bitcoin chart and start with some BTC price analysis as always. So for Bitcoin, let's start with the daily candle, shorter time frame, and then we're going to hop onto the weekly candle. So on the daily, there is this declining line that we are forming. So this is the major resistance we are eyeing very closely. This is a resistance that has been formed ever since 6th of October. So it has been more than 2 months. And whenever we get close to this downward trend, this downward momentum, Bitcoin tends to get rejected by it. And right now we are at the point that maybe we're going to get rejected again because this is a momentum that has been played out for 2.5 months, and I won't be surprised to see we get rejected again. One thing I like about this chart is that we have rising support, so it's not all doom and gloom. So Bitcoin has been forming this upward momentum ever since 21st of November, and every time we touch this and we manage to bounce back up and rather quickly, at least we didn't close below that. So this is a nice thing that I'm seeing. We're getting very close to the end of this triangle. If we manage to have a daily candle actually close above this declining line, this is a bullish strength. So I'm seeing a little bit of strength despite this is still a bear market in general. However, if we lose the support, then I won't be surprised that December are going to end with a negative number. Right now, December is sitting at minus 1.52%. Let's see if we manage to close it at least a flat number or perhaps a small positive number. The reason why I would say this is if we very quickly hop onto the weekly chart, we'll manage to see that. Let's bring out the Ichimoku cloud. This is an indicator that I love using because it is a leading indicator to showcase where Bitcoin is heading to, where the momentum is telling us where Bitcoin is going. So in terms of the Ichimoku cloud, last time when we are inside this cloud, it was back in January 2022, of course, being a bear market. And right now we are inside this cloud. And one thing about the December outlook that I'm eyeing is that last time when we are trading inside this cloud, we essentially spent like 3 months consolidating. So even within this 3 months, we saw pump like this. So we dropped below the Ichimoku cloud for a little bit, and we managed to get to the basically the top of the cloud, so that main resistance level that we're watching. So even inside this cloud, we managed to pump 30% in a matter of weeks or even months. So I won't be surprised that we're gonna see the same. So when I was talking to other traders, what they are eyeing is that perhaps in December we're going to end with a slight positive number, though the I doubt the pump is going to be significant. But let's see if we manage to get to above 100K, maybe before February. Like December, personally speaking, I'm not that bullish, but let's see if we manage to close with a flat number. That being said, I don't think history will repeat, but will likely rhyme. So this is the reference we could look at. And not to mention the overall trend, I'm still really bearish because this is still a bear market in every single technical term out there, because we dropped from 126K down to 80K, and that was 36% correction. And by all means, this is a bear market. Not to mention, if we pull up the 50-week moving average, and let's close the Ichimoku cloud. So the 50-week moving average being the blue line here, if we have 2 weekly candles actually close below the 50-week moving average, that is the definition of a bear market. So even in a bear market, I won't be surprised to have that cap bounce like this and then only to go down even further and perhaps to reach the 200-week moving average. Right now it's sitting at 57K, somewhere around that. So this is completely normal, but overall it's still gonna be a bear market and still gonna suffer a little bit longer. And same thing applies to a bull run. So bull run is really often to see pullbacks like this. And when we have pullbacks, and only in hindsight, we know that that is a massive opportunity to scoop up some BTC. However, trend is your friend, and don't trade against the trend. And the trend right now is being a bear market. So that's the quick BTC update. And today I do want to dive deeper into the macro, because there are a lot of news that I want to go over. So without further ado, let's dive into the China situation and how global economy is doing. China just came out and they kept its main lending rates the same for the 7th month in a row. So 1-year rate is 3.35%, while 5-year rate is 3.85% respectively. What this means is that China is not cutting rates, even though the economy is weak. Why? Because the Chinese yuan is already really weak. Cutting rates too much could create financial risk, and China wants stability at the moment, not big moves. Instead of rate cuts, the central bank is using small tools like liquidity injections or bond buying or earlier cuts to support the economy quietly. And in terms of the Chinese economy, how it is doing, it is weak and still in deflation territory. So China grew around 5% this year, but the momentum is fading away. And this is the figure that we could see from TradingView. So China's economy expanded 4.8% year on year in Q3 2025, which is down from 5.2% in Q2, marking its slowest pace since Q3 2024. While in line with market expectations, the GDP growth has lost momentum after a strong start to the year, pressured by US trade tensions, prolonged property slump, and soft consumer demand. September data showed retail sales in China rose at its slowest pace in a year despite ongoing consumer subsidy programs, while the jobless rate edged down but remained near August 6-month high. And if we look at the GDP growth rate, it is really slowing down quite a lot, especially if we zoom out compared to how China was doing. After COVID, China managed to get to 18%, 18.9% in Q1 2021, and right now is slowing down drastically compared to before. The reason why is because factory output is at the slowest in more than a year. Retail sales is, of course, one of the weakest readings since 2024. China right now, they have been in deflation for 10 straight quarters. So the CPI report is minus 0.5%, while the PPI is minus 2.9%. This shows consumers are not spending, businesses are cutting prices, and confidence is weak. Not to mention, if we look at the youth unemployment rate, so jobless rate for young people is it eases to 16.9%, while it showcases eases, but it's actually like 69% is a really high figure to mention. Government is trying to help with a 10 trillion Chinese yuan stimulus package, but the results are very slow. And combined with how the Chinese market is doing, if we also hop onto the US also suffering from high unemployment rate. There's a rising unemployment rate. Of course, we didn't get the October figure because due to the government shutdown. So the November figure is 4.6%. It's up 0.2% compared to September. People say the October one, it was manipulated because the calculation, they basically start from zero. And that's why people say the actual situation, it might be a lot worse compared to what we are seeing right now. Obviously, in the US, the economy is slowing, hiring is soft, and wage growth is cooling. The Fed cut rates slightly, but the economy still faces recession risk. While as if we hop to Japan, and if we look at the Japanese interest rate, Japan just raised its interest rate to 0.75%, which is the highest since 1995. Why this matters globally? Because Japanese yen rates unwind the yen carry trade. Investors sell risk-on assets to repay yen loans, and that would affect stocks, that would affect bonds, and especially Bitcoin. Japan is also dealing with higher inflation and huge government debt. They have one of their highest debt to GDP ratio compared to the rest of the world is more than 200%. So Japan is at a really fragile point. And after the last decade and after Japan has been staying its rate below 1%, finally it's getting out of deflation, but looks like it's getting worse after the deflation situation being under control. So in other words, are we near a global collapse? I would say not yet, but the world is fragile because China is right now at a deflation situation. China is still suffering from deflation, not like Japan. While in the US, there is a rising unemployment rate. Japan is tightening liquidity, and global debt is more than 300 trillion US dollars. Trade tensions are rising between not just China and US, but globally. So the world, I would say, isn't collapsing, but it's at a very unstable stage. Maybe this is the reason why gold and silver keeps breaking its all-time high. And when it's come to global liquidity, here are some figures. And global liquidity just hit record high of $45 trillion in M1 money. This is the highest ever. because one of the reasons why this is breaking new record high is because China is stimulating the economy with $16.5 trillion. This is at all-time high. China has driven the majority of global money supply growth this year, and China is currently the largest producer of narrow money in the world, accounting for 37% of total. Meanwhile, the US M1 money supply, excluding saving deposits, is up to a record of $8 trillion, representing 18% of the world's total. This matters because more liquidity normally pushes asset prices higher. That includes stocks and crypto and real estate. But this time, the money is not flowing, even with global money supply reaching a new record high. This is because China is in deflation, US consumers are weak, Japan is tightening liquidity, and markets, in other words, they are experiencing the nervous like never before. So Bitcoin is stuck at around 90K, somewhere around that. Even global liquidity is at a record high. Normally, more liquidity means higher Bitcoin price, but right now, Bitcoin is lagging because all the global liquidity, all the instability around the economies in the whole world. So historically speaking, BTC would follow liquidity with a lag. If we also pull up the global liquidity chart, the GLI, we'll manage to see that usually Bitcoin would lag the global liquidity by 2 or 3 months. So the yellow line being the global liquidity, the candles here being the Bitcoin price. And ultimately, if we zoom out, Bitcoin would follow the global liquidity very closely. But right now, it seems like we deviate a little bit. Meanwhile, stocks market is close to its all-time high. So in other words, short term, it looks like it's still going to be weak for Bitcoin's price and where Bitcoin is heading to. However, once the US starts easing more aggressively in 2026 and Japan slows down its tightening, Bitcoin would likely realign with global liquidity once again. So medium term to long term, I'm bullish, where short term and at the very least to Q3 2026, I'm still remaining my bearish stance. All right, so this is the macro analysis and Bitcoin quick market analysis I want to do. Next, I still want to dive into the Epstein files because there was so much controversy. But before we do that, let's take a little break and I'll see you guys in 3 minutes.
Security matters. Zappo Bank, the only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, The London Stock Exchange became the financial centre of the world. The 20th century came and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Alright guys, welcome back. As I mentioned, we're now going to dive into the Epstein file because it is getting more controversial than ever. The Epstein files is finally being released, but the DOJ's action made the scandal even bigger. Why? Is because the DOJ temporarily removed a picture that included Donald J. Trump, Melania Trump, Epstein, and Maxwell, and only to restore it after public outrage. Democrats immediately accused the DOJ of protecting powerful figures. Republicans accused Democrats of twisting the narrative, and millions of Americans are now asking the same question. What else is being hidden? And who is the DOJ trying to protect here? This is why the new release is more explosive than the file themselves. So if you guys didn't know, here's a quick background about this case. Jeffrey Epstein ran a global trafficking network for underage girls for decades. Victims were recruited with massage offers, often paid just $200 to $300. He abused girls in his private island, his New York and Palm Beach mansions, his private jet known as the Lolita Express. So Jeffrey Epstein died in jail in 2019, but his partner, Maxwell, was convicted in 2021. What made the scandal so explosive was Jeffrey's elite networks. People from politics, tech, finance, and entertainment. Names that show up in photos and logs, they include Bill Clinton, they include Donald J. Trump, and they include Bill Gates, and etc. No one else was charged, which is exactly why the public demanded full transparency. The only reason us, the public, got a chance to see this file is because the Congress passed the Epstein Files Transparency Act, requiring the DOJ to release everything by 19th of December. This law had rare bipartisan support, so over 60% of Americans from all parties demanded the files. So the DOJ released the files. There are more than 13,000 pictures being released, and some of them show Bill Clinton in a hot tub and Donald J. Trump in framed photos, Bill Gates standing with Jeffrey Epstein and Maxwell and Prince Andrew, and a bunch of young women, the faces being redacted in Epstein's properties, passports and IDs of foreign girls, message logs discussing sending girls and prizes, and schoolgirl outfits and payments to minors. Most of this confirms what we already knew. This was a long-running trafficking operation protected by the elite. So, however, here's the moment everything exploded. So file 468, which is a photo from inside Jeffrey Epstein's home, contained framed pictures of Bill Clinton, of Donald J. Trump with Melania and Maxwell. So DOJ uploaded on 19th of December, but they decided to remove it on 20th of December. They claim it was to protect potential victims, but the photo contained no minors. This triggered a political firestorm. Democrats accused DOJ of protecting Donald Trump. Republicans said Democrats were weaponizing the release, and social media absolutely exploded with cover-up accusations. After 24 hours of backlash, the DOJ restored the Donald Trump photo unchanged, but the damage is of course done. People now believe if one photo was removed, what else is being hidden? There are no criminal allegations against high-profile figures, but there are confirmations. Girls aged between 14 to 18 were recruited repeatedly. Maxwell dressed victims in school uniforms, and JP Morgan executives ignore red flags. The big unanswered question remains, who enabled Jeffrey Epstein, and why were so many people protected? Because even now, after tens of thousands of files, almost no one else has been held accountable. This scandal actually hit both parties, including the Democrats and Republicans. So Bill Clinton's appear in multiple files. Democrats accused Donald J. Trump's DOJ of hiding info, while for the Republican, Donald Trump appears in photos and logs. Republicans accuse Democrats of selective releasing images. Both sides are pointing fingers, but the victims still have no justice. This is why the public is so frustrated, and this is not about left versus right. It is about elite immunity. So scandals like this destroy public trust. When people see the rich and powerful can hide evidence, alter records, and escape accountability, they start looking for systems that cannot be controlled. And that's why moments like this push people toward Bitcoin, which is a transparent, neutral system where no government, no institution, and no elite can rewrite the truth. And let's move on to the next piece of news. And when it comes to AI and UAE, so the president of UAE just hosted Elon Musk in Abu Dhabi, and this meeting is much bigger than a friendly visit. This is because the UAE is trying to become the AI capital of the world, and Elon controls the most important pieces of today's tech future, including EV, including rockets, satellites, AI models, and a global social media network. So this is not a casual handshake. This is a signal that UAE wants to partner with Elon Musk on the next wave of global technology power. And what happened in this meeting? So the meeting took place on 21st of December in Abu Dhabi. The president of UAE and other UAE leaders, like the Dubai Crown Prince and the National Security Advisor, also joined the meeting with Elon Musk. The topics that they discussed mainly surrounded AI and space exploration, clean energy, and digital transformation. There isn't official deals being signed yet, but this is how every major UAE partnership begins, with high-level discussions, alignment, and vision. And honestly, Elon Musk might have more synergy with UAE compared to even the US, because UAE has been building an AI first economy even ever since 2017. They are the first country with a minister of AI. They are the home to even an AI university. This is the first AI university in the world, and targeting a 14% GDP boost from AI by 2030. And of course, for Elon Musk, what he brings on the table, he has Tesla, that is the biggest when it comes to autonomy and robotics. And he controls SpaceX, which is satellites and space partnerships. He is also really big in XAI that controls Grok model and AI agents. And he owns Starlink, which is a global internet and connectivity. All Elon is doing fits perfectly with what the UAE is trying to build here. And there are real AI projects that UAE already uses. For example, government automation. AI would handle visa processing, border control, digital ID, and the AI is also being used in healthcare to predict patient risk and reduce hospital remissions. And when it comes to renewable energy, AI optimizes solar farms and predict outputs. The UAE has been preparing the infrastructure, and partnering with Elon Musk could move it to the next level. Timing wise, it's very interesting as well. So, just days before meeting the UAE President, Elon Musk signed a historic agreement with El Salvador. So, Grok AI will be installed in 5,000 public schools, reaching 1 million students. This is the first national AI school program in the world. Free upfront for the government, focus on personalized education. This shows Elon Musk is now building country-level AI partnerships and not just company deals. While the UAE meeting signals future investments and strategic alignment, the El Salvador's one is already in execution mode. If the UAE secures a deeper partnership with Elon Musk, it could boost Tesla and SpaceX presence in the region, and it could become the Middle East AI headquarters. So this meeting is the opening move in a much bigger strategy. And as a Bitcoin investor, why do we find this interesting? Because whenever world leaders meet to plan AI, robotics, and digital infrastructure, Bitcoin indirectly benefits. This is because nations digitize their economies. They move closer to digital money, to digital identity, and decentralized system. Countries working with Elon Musk, also countries exploring digital assets, tokenized payments, blockchain-based governance. So the UAE is already a crypto hub. And whereas El Salvador, they made Bitcoin the legal tender once. If AI becomes national infrastructure, crypto becomes the financial layer beneath it. This is why Bitcoin investors pay close attention to global AI diplomacy, because it shapes the future rails of money. So let's take a little break before we dive into some holiday news, because something is quite warning for the holiday candy is that you could be eating some fake food. But let's take a little break and we're going to dive into news in 3 minutes.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Roxum, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick, monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back, everyone, and thanks for sticking around for the holiday special. We have spent today talking about some really big things, including AI and including how the world economy might be on the brink of collapse. But since this is the holiday season, I want to leave you with something lighter and actually maybe a little bit shocking. CNBC just discovered a story that shocked a lot of people. Many chocolate makers are quietly switching to cheaper cacao alternatives to survive. Some experts say the real chocolate may become a luxury product in the future, something like high-end coffee or premium Wagyu beef, while most supermarket chocolate becomes cacao reduced or even fully cacao free. And here's the problem. Over the last 2 years, bad weather in Western Africa destroyed cacao crops. Cacao price actually shot up to $12,000 per ton, which is a all-time high. Then prices crashed over 50% in 2025. This wild price swing created chaos for manufacturers. Even though cacao prices fell this year, companies still struggle because they locked in high prices months ago. The result is that chocolate prices in the US went up 30% compared to last year. Companies like Mondelez publicly warned investors about cacao becoming too unpredictable. And some well-known brands in the UK, like the Club and Penguin bars, even had to change the labels from chocolate to chocolate flavored. They reduced the cacao content so much that legally they can't call it chocolate anymore. So what's the rise of the fake chocolate? Startups around the world are creating cacao-free chocolate replacement because cacao is so volatile and is becoming too expensive, and climate change is hurting crop supply. Big companies want cheaper and more stable ingredients, and these cacao alternatives use things like pumpkin seeds or chickpeas or sunflower seeds. They actually taste very similar to chocolate when used inside cookies, cereals, coatings, and snack bars. So don't be surprised if your next chocolate bar is only around 20% cacao or even zero. Industry is preparing for a world with less cacao because real chocolate won't get cheap anymore. Even though cacao prices dropped this year, they believe the era of cheap chocolate is over, and especially there's rising demand from all parts of the country, all parts of the world, including China, including India. So the demand is only going to go up. Companies already diluting chocolate quietly. Brands are launching more yogurt cream bars or Rice Krispie bars. These products use less cacao but still feel rich to the consumer. So what does this mean for you who are watching this channel? So premium chocolate bars will become a luxury treat. Everyday snacks like cookies or cereals will use alternatives, and this is happening. It's not just like it's not very widely advertised. That's all. So here's the holiday special throw in for you guys. Well, let's actually move on to Bitcoin because like there are some good news coming from Michael Saylor yet again. So Michael Saylor is back with another cryptic post on X. So this is what he wrote on 21st of December, so yesterday. So green dots and orange dots. If you're new, green dots means signals leading up to Bitcoin buys, where orange dots equals to Bitcoin buys. Every time Michael Saylor posts something like this, he buys billions worth of BTC within days. The post already hit 1.4 million views, and traders are now preparing for a potential market moving announcement. So, the question people are asking right now, if strategy stock is trading at a discount, how can they still afford to buy BTC? The answer is rather straightforward. Michael Saylor builds a financial loop that gives him access to cheap capital even when the stock market is down. So, Michael's strategy, let's take a look at his holdings. Right now, they're holding 671,000 BTC on the balance sheet at an average cost of $72,000 per BTC. So, the current market cap of MicroStrategy is around $47 billion. Most companies would stop there, and especially when they are holding this much BTC on the balance sheet already. But Michael Saylor does the opposite. He is using different methods, for example, preferred stock. In December, MicroStrategy launched a preferred stock program to raise another $8 to $12 billion for more BTC buys. Not to mention, they have huge pile of cash reserves. He set aside $1.4 billion just to cover interest and dividends, so he never has to sell any of his BTC. This system lets MicroStrategy keep accumulating BTC even when everyone is struggling. So most Bitcoin treasury companies cannot do what Michael Saylor is doing. If we look at the website that all these BTC treasuries, most of them is underwater and most of them is trading below 1x mNAV. So most of these companies, they can't do what MicroStrategy is doing. The reason why is because MicroStrategy is built specifically to be a Bitcoin leverage machine. Ever since 2020, and its stocks went up 3,000%. This gives them access to cheap capital that no miner or tech company can get. And second of all, even Tesla have BTC on the balance sheet, but BTC, of course, is not Tesla's majority, it's not Tesla's core business. They won't issue billions of dollars of debt just to buy some BTC. And the third reason why Michael Saylor can do so is because borrowing costs for strategy for other companies are too high for everyone else, whereas MicroStrategy can borrow at a 0 to 1% rate, which is extremely low. And compared to other companies that we are seeing on this list, they have to borrow at a cost around 8 to 14%, which is quite impossible for buying such a volatile asset. So what to watch next? Everyone is waiting for a new BTC purchase from Michael Saylor, is waiting for that announcement. Michael Saylor stepping in again at these levels especially sends a clear message. He believes that we are still early, even though near $90,000 per BTC. So that's one good news from the Bitcoin market, and hopefully this is some adding some positivity to the holiday season. Well, moving towards the next part of the segment of the show, we also have a Bitcoin developer. He's here to offer some of his perspective of where Bitcoin is going to, and also really translate all the technical Bitcoin talk into understandable, into human language so everyone can understand. So stick around and I'll see you guys after the break.
Security matters. Zappo Bank. The only way to bank your Bitcoin. Apply now at zappobank.com.
So, tell us about your furry friend here. What's his name?
Oh, this? This is Bitcoin.
Bitcoin.
It's not just a cat, he's family.
Quite a name, and I must say, looks quite pampered.
Oh, absolutely. Bitcoin deserves nothing but the best. He's my little prince.
But with such a valuable pet, aren't you afraid of losing him?
Losing Bitcoin? No, it never happened before, so it's not something I worry about. Excuse me for a moment. Bitcoin, stay here, right?
Bitcoin, no! Bitcoin, come on, little buddy, Bitcoin, I need you. Don't go.
In a world far away. Nah, just kidding. This story begins in this world. It all started in 1460 in Antwerp, when the first commodities exchange was created, but the real transformation came in 1602, when the Amsterdam Stock Exchange was founded. Considered the oldest in the world, it was the first to trade financial assets. Over the years, Britain expanded its colonial and maritime influence, and the British pound sterling overtook the Dutch guilder in the market. Thus, the London Stock Exchange became the financial centre of the world. The 20th century came, and the world got into some trouble. But shortly after World War II, the Bretton Woods Agreement established the dollar as the world's primary reserve currency, and the centre of the planet moved to Wall Street. Today, we're travelling at the speed of light towards a new age, an era shaped by the consolidation of Bitcoin as the currency that will define the future of the markets. We present Roxum, a new Bitcoin-denominated market that allows trading all sorts of securities, commodities, derivatives, options, and anything you can imagine. Rocksome, rock-solid markets.
Some call me Chicken Little, others Bubble Boy. I'm a bit changed, but sounds familiar, right? Let me tell you a hard truth. The S&P isn't rising, the dollar's falling. That's the trick. Monopoly money. It's ice melting by the second. Your savings, your salary, your time. Worth less every second. Everyone's using the wrong measuring stick. Switch the denominator. Price the S&P into Bitcoin. Hard, fixed, unprintable. Suddenly your unstoppable index, it's collapsing. And while you cling to dollars, well, Wall Street already switched. Before, you needed 2 brokers.
Still getting my ninja bonus though, right?
Plenty of spreadsheets. And my quant!
I hate this part.
I was right, and I'll be right again. If I were you, I'd thank me.
You know my name's Dave, right?
Welcome back, everyone. Today, we are joined by someone who can help us translate all the technical Bitcoin talk into plain human language. So, Gareth is a Bitcoin developer and a long-term contributor in the Hong Kong community, and he is here to help us break down how Bitcoin actually works behind the scenes without the jargon, and in a way all of us can understand. From who really controls Bitcoin to how upgrades happen to why different versions like core and nodes even exist. Gareth is going to guide us through it step by step. So, Gareth, thank you so much for being here. So,
Thanks.
since this is your first time on this channel, why don't we start with a little bit of background about yourself and what you do at the Bitcoin Association of Hong Kong?
Sure. I'm currently one of the directors of the Bitcoin Association of Hong Kong, and I've been a member there for over a decade. It's one of the earliest, or probably the earliest, Bitcoin meetup and Bitcoin association in the world. And we basically exist to help the business community and the government understand Bitcoin.
Okay, so seems that you are an expert in Bitcoin, and I'm sure there are so many questions from our community, and basically trying to understand how Bitcoin works in a more technical perspective. People say Bitcoin isn't controlled by any bank or government. So who actually controls the Bitcoin protocol, and what does that work in? How does that work in real life?
So the protocol is like how basically how transactions are actually verified or validated. And that comes down to consensus. So like everyone on the network needs to come to consensus over what the current set of transactions are. Um, ultimately the people who control the Bitcoin protocol are those, it's like a rolling set of people who are actually buying Bitcoin or receiving Bitcoin in exchange for something else, because um, like some people, there's a lot of misconceptions about how it works. People often think that miners control Bitcoin. But like if you're mining Bitcoin and the chain splits and you're mining the wrong side of the chain, then you can't sell your coins. So you're going to mine the coins that have value, and that comes down to who's actually buying the coins. So that's why they ultimately decide on the version of the protocol that is actually considered Bitcoin.
And another concept people like to ask is between developers and miners and nodes. So could you explain in more simple terms, what do they do? Like developers, miners, and node operators each do when it comes to changing Bitcoin? And where do those Bitcoin improvement proposals, aka BIPs, fit into that process?
Um, well, Bitcoin is designed in a way to make it very difficult to change without near unanimous agreement between everyone involved. And so it's intentionally very difficult to change and slow to change, and it shouldn't really need to change that much unless there's a security issue. So developers obviously have to implement changes if there's going to be a change to make, and then it's up to the community to adopt that change, so that the coins still have value for miners to sell. The Bitcoin Bitcoin improvement, essentially Bitcoin improvement possibilities or proposals. They are sort of a starting point to rally support around a change. They're an attempt to articulate like what the problem is that needs to be fixed, and so that everything is quite clearly documented from beginning to end. And then so that we can see that everyone's discussing like the same thing. That's why it's codified into a standard format. It's then up to, if there's a clear indication that like people really want this change, then the developers will spend time implementing it. Although usually what happens is people implement it anyway, and then we decide whether it actually is going to be merged or not. Often BIPs get implemented in other chains first, like Litecoin might implement. I think Litecoin actually was the first network to offer Lightning on chain rather than Bitcoin. So like that's an example of where things get adopted somewhere else first to be tested out before they make it into Bitcoin.
All right, so one thing is quite controversial is when it comes to the centralization aspect of Bitcoin, because like Bitcoin is meant to be decentralized, but at the same time, there are groups like the Bitcoin core team, they are being very influential. So is there any risk that control becomes too centralized, and how does the community keep that in check?
So there's always a risk that Bitcoin becomes too centralized, but the longer term trend is that it's becoming less centralized. I mean, in the beginning, it was like one guy who making all the decisions, right? And then it started becoming more people involved, and now you need to convince the entire market to adopt whatever change you want to make. So yeah, there's a risk, but it's not. I don't think the risk is anywhere near. Of course, it's good to be vigilant, but I don't think the risk is anywhere near as high as a lot of people think it is. Um, Essentially, again, like the market decides what Bitcoin is, so it doesn't really matter what the developers do. And if they do something that people really don't like, then Bitcoin will fork into multiple forks, and then we'll find out like which one wins based on what the market wants.
Speaking of forks, is there an actual threat to the whole Bitcoin network? Because like, okay, when people in a disagreement, then there are some other new proposal being raised. So like, how does Bitcoin's consensus system make sure no single group can change the rules on their own? And what happens if people simply cannot agree?
So yes, when people can't agree, then there is a fork. So Bitcoin is adversarial by its nature, and problems are resolved by forking. If it really comes down to something that we can't agree on. And so that's the ultimate sort of fail-safe. Like instead of a physical fight, it's just we fork and we see which side of the chain people think is more valuable. So just like Bitcoin Cash forked off because they had a different idea of what Bitcoin should be. And we found out that that isn't what people want in general from Bitcoin. And so that's what we have to SegWit today. Yeah, that's sort of how it works. It really comes down to the market. Everyone else really doesn't have any hard power.
Okay, got it. And as the beginning of our interview, we talk a little bit about Bitcoin Core and Bitcoin Not. So I wonder if you could explain the difference between them in a most non-technical way, so everyone can understand. Like, for example, like how does Not's extra transaction filtering help with issues like network spam?
Okay, let's see if I can do this without getting into any trouble. um, so there are two sort of Bitcoin Not. The difference is that so first you need to understand what mempool is. Mempool is how transactions are propagated before they get put on chain. And Bitcoin nodes like relay transactions between each other. So what happened was Bitcoin Core increased the size of a specific type of transaction, increased the allowable size of that transaction, which of that type of transaction, so that you can include extra data on chain. Except that it didn't actually change any of the rules about what can be included on chain. It changed the rules for relaying those transactions between nodes before they get into block, before they get put on chain. Bitcoin Knots stops that relaying before it can go on chain. So if you try to put like an image onto Bitcoin, that requires a very large transaction of a specific type. So Bitcoin Knots is attempting to stop that by preventing it from being relayed through the network. But of course, like you can send those transactions directly to a miner and they'll just put it into a block anyway, which is what's been happening prior to this change anyway. So yeah, there's quite a lot of controversy and quite a lot of debate. And I think at the moment, there's a lot of people who don't really understand either side, but they have very strong opinions about whichever side they're on. And it seems like there's sort of like the people who support Knots, the majority of them are newer to Bitcoin than the people who support Core. So people who support Core usually have been around quite a lot longer. And there are quite a lot of nuances involved, which we're not going to cover, be able to cover here quite quickly, and it's also quite technical. So yeah, in short, it's very controversial. So essentially, Bitcoin Knots, I think they're in it for the right reasons, and it's one attempt at solving the problem. It's, in my view, like not the correct way to do it, but it's good that people are trying.
Yeah, I mean, I love that analogy of using images as an example. Definitely help the non-technical viewers to understand how Bitcoin network works a little bit more. But like to build on that, like the debate between core and not, and especially around things like OP return limits, like do you think having alternative implementations actually makes Bitcoin more decentralized, or is there a risk that would split or confuse the network even more?
I think ultimately it's a good thing to have more implementations. Competition is always good, right? So, and Bitcoin is adversarial by nature. That's what makes it strong. So it's good to have a fight out in the open publicly, where everyone can just see exactly what's going on, and then we can settle it at the market level. I think like if there are some indications that this might become a fork. And if that does happen, that's fine. The market will figure it out. But it's hard to say whether it would have like last time there was a fork, it had quite a negative impact on Bitcoin for a little while. But I think long term it makes it a lot stronger. So yeah, I guess we'll find out.
All right, thank you, Gareth. So, is there any last word you would like to say to our community, or if our community wants to know more about your perspectives, where's the best way to reach out to you?
I'm on Nostr. I guess I'll give you a link or something. Nostr IDs are quite long, so I can't say it here. But yeah, other than that, there are plenty of other people around who to find out more about Bitcoin Knots. There's a guy called Luke Dasher, and to find out more about Bitcoin Core and their perspective, there's Gregory Maxwell or Adam Back. You can find them on Twitter. All of them are on Twitter, and you can read everything they have to say about it.
Awesome. So, thank you, Gareth, for your time, and also we'll be sure to link Gareth username in the description box below. So, thank you so much, guys, for watching. Our show it will be every Monday to Friday at 3 a.m. Eastern Time, available on both Jam Crypto YouTube and on Roxham TV YouTube channel. Happy Christmas, and I'll see you guys in the next one.